Hey everyone, I'm Mark Goucher and welcome to another video of Simplicity Investment Watch. Today is Wednesday, February 12th, 2025. Today's video is a short lesson on a point about staying away from earnings dates. I want to break away from my usual format of talking about the major markets, pending economic news, and my bull and bear list updates. And I want to share two very great examples of why I stay away from taking an option position into a stock earnings report date. Before I get into that, though, I want to go over our disclosure real quick. Okay, we do not give financial advice, and this information is not for investment decisions. This is for educational purposes. The stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is a suitable investment profile for you, given your investment goals and objectives. All right, first stock today I want to talk about is Trade Desk, ticker symbol TTD. I talked about this in my video the other day. This is on my watch list. This went into a TTM squeeze, which is these red dots right here. It's one of the many factors or criteria that I have set up on my daily market screen or filter to feed me stock suggestions that I can then vet and hopefully take a list of 25 or 50 down to about maybe 5 good candidates and pick one or two out of that. So this TTM squeeze, it's technically still on. But I put it on my watch list because even though, first of all, it's still in TTM squeeze, and I like to, you want to get into it when it comes out of its squeeze, when it pops. Because quite frankly, even though this has been an uptrend, and actually it's been an uptrend for quite a while, since at least beginning of 2023. That uptrend since 2023 has been roughly 229, well, let's call it 213%. And then even more recently, let's say 2024, you got about 106%. And even if you go with the close today, it's 82%. So this obviously is in a very strong uptrend. So that's what I'm looking for. It's in an uptrend. It goes into some type of consolidation where the squeeze comes in, and you want to catch it when it comes out of the squeeze, hopefully resuming its uptrend. But you don't want to guess, right? You don't want to just go ahead and say, I'm going to go ahead and put a position on this because it's going to come out of it's going to come out of the consolidation and go into its next leg of the uptrend. No, not necessarily. This could be the beginning of a downtrend for some reason, but. So here we have the recent high on December 4th, and I set an anchored VWAP off the top of that. And basically, sellers have been in charge ever since December 4th. Then it went into consolidation, and I put this box around the consolidation zone because I want it to come out of TTM, so it's going to go green, and I want it to get out of this consolidation box. It has admittedly, it has a lot of overhead resistance. It has a 50-day moving average that's above it. It has the anchored VWAP off that recent high. It has the Ichimoku cloud above it. So there is admittedly a lot overhead, but if it can get through this, we're clear up until around this zone, around 140. And that may or may not. I mean, that may offer a little bit of resistance, but it's less than what's down here. So all that said, here we go with earnings reports, and I talked about this the other day. I'd be careful about getting into this with the earnings reports coming on the 12th. Today is the 12th. The earnings were announced after the market, and it looked a little bit like this. What you're looking at now is these are 15-minute candles. This is 1 day of market action. This is the post-market action, this red, and this green is the pre-market action. So like, for instance, this morning on the 12th, this was the post-market action this morning. Then it had its trading day where it actually had a gain today. And then after the close, it announced earnings. This long red ugly line is the first 15 minutes of post-market action after it announced earnings. And there are a whole lot of people that were running for the door when the fire alarm went off. And they went down 25% in 15 minutes, and then it just kept going down, 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 down to about 27%, and it kind of leveled out there, at least post-market. And then, so then we're going to head into pre-market action tomorrow morning. More than likely, it's just, whoever didn't pay attention to the earnings or see what happened tonight, may be aware of it now or become aware of it in the morning, and they're going to be selling. And then we'll head into tomorrow's regular market hours, where there's probably going to be some good selling to go on there as well. So again, none of that's a promise, but this is the risk of coming into earnings, of what could happen if you set up a position. So TTD did miss on revenues. They hit their earnings number, but they missed on revenue. They missed big on revenue. And the guidance was soft going forward. So because of that, investors basically, as I already showed you on that other chart, there's been this long run up, and investors just said, hey, time to take profits. So that there's one great example of where earnings can hurt you. You need to have some kind of protection in place in terms of a stop loss or some kind of option strategy that's going to protect you from the downside, like a protective put. Any device or any investment vehicle you choose, but just make sure that you're not leaving yourself exposed through these earning dates. And again, I usually it's very rare that I'll take a option position through a known earnings date, and if I do so, I'm doing so with some kind of strategy in there in place to protect against exactly this. All right, let me show you another example. All right, here we have Reddit, ticker symbol RDDT. This was on, or is on, my my bull action list. So it's on my bull list, meaning that I take a position with it. All right, and basically, just like very similar. I mean, this is the classic example of what I'm looking for through my screens. Is this started trading last March 2024, hasn't been trading for quite a year, but in that year it has gained about 315%. So pretty phenomenal. Its last earnings report before the one today, the last earnings report was in October, and even then, just prior to earnings, it was here, and it's had a 164% run up. So another example of something that's probably very frothy, had a lot of gain, ripe for profit taking. And we come into the earnings that was reported today, and let's take a look what it looked like on the 15-minute chart. Just 1 second, refresh. And voila, here's your 15-minute chart. So, as I explained before, this was today's action pre-market this morning. During the day, it just had this movement, and then after market, it was this right here. Yeah, it was ugly. So, hold on, let's measure that. So we're talking roughly, on the first 15-minute close, it was down 12.5%. At its lowest point, way down here, it was down nearly 20%. And before post-market action recovered, it was back up to 13.5, roughly, down 13.5%. So another example of the hazards of walking into earnings, and you'll say, hey, well, earnings can be good, and this could be to the upside. Yeah, it absolutely can, but I'd rather miss a party than be in that car wreck. But let's talk about the earnings for Reddit. So if I told you it hit its earnings, it exceeded its earnings, it exceeded its revenues, and they basically gave in the earnings report, they gave strong guidance going forward. You're like, oh, this should, okay. If I told you that before I showed you this chart, you're like, oh, wow, how much did it go up? No, this is what happened. It just turned into profit taking. Again, very frothy. So this is a candidate for that. But the key takeaway is, and I bring it up in previous videos, is the hazard of taking an options position through an earnings date. You can do it. I will do it on occasion, but as I mentioned before, make sure you have some type of strategy in there or some kind of um, stop loss or something in there to protect you from what you're seeing here in front of you now. Okay, so that's it for today. If you have any questions or you need to reach me, my email is mark@simplicittyiw.com right here on your screen. And I want to thank you for your interest and for your time. Please click on subscribe for the channel. And once again, thank you. And remember, keeping things simple is really smart. All right. Good night, folks.